Hello guys, welcome to the 7th video in the Aerial FX Beginners course. Today in this video I will be discussing with you the 3 market phases the market goes in, which is accumulation, distribution, and the actual trend itself, shifts in structure and fibs, and the rule of 3. So these things are going to be extremely important in determining your actual trend in the market, what phase you are in, what phase you are trading in, how to spot shifts in structure, and the rule of 3, which is a rule that I like to use in my trading, and I'm going to discuss with you today, which could help in your trading as well. So let's first discuss shifts in structure and the rule of 3. Okay, so shifts in structure occur when you are particularly trading in a certain direction and you break a previous swing point. Okay, and let me just give you an example of this really quick. So on a higher time frame on USD CAD, we were trading in a bearish market. Okay, we are pulling back on a higher time frame, but on the 4-hour time frame we are bearish. Lower low, lower high, lower low, lower high. Okay, so when I say shift in structure, this is what I mean. Okay, so we have our lower high, our lower low, our lower high, our lower low. Now let's say price decides to break this swing point that made this previous low. If we break this swing point, we will be shifting structure and now going long, meaning we will be pulling back to go long. Okay, we created a lower low but also a higher high, so now we want to expect a higher low, higher high. Okay, obviously we didn't do that here, but the same kind of principle can apply to a counter trend shift in structure. So I'm going to scale into the 1-hour time frame here, all right, and show you exactly what I mean. So right in here, obviously we are trading on a higher time frame, on the 4-hour time frame, bearish. Leg, pullback, leg, pullback, leg, right? So what we want to be seeing when we finish this pullback, okay? So when we have a pullback, all right, this is a contractionary period. So after a leg, we need some sort of relief, so we have a pullback. And sometimes a pullback can consist of a lower time frame leg to the upside, something like that. That's what I was expecting to go short. We only got 2 legs to the upside here, so we only got 1 and then 2 before falling. But even still, even if we had 1 drive, maybe 2 drive, maybe 3 drive, and then we fell, that would be a counter trend drive to the upside. Okay, counter trend to the upside, which is just a simple pullback on a higher time frame. All right, so in this case we only had 2 drives here, but it doesn't matter because look, this was our higher high on the pullback, this is our higher low, this is our higher high. To shift structure, we broke the swing point, we took out that swing point. Now we would expect a pullback to continue short. All right, even though we are still short, we're counter trend bearish now, and now higher time frame bearish. So not only are we trend bearish, which is this is the trend here, but now we're counter trend bearish as well. So now we know we're not going to come back above this high. We can pull our fib from wherever it stops. Okay, so whenever price breaks structure, or in this, I guess in this term, if we were to have made a new high, so if we want like 1 drive, 2 drive, we could pull our fib from the low to the high to see where we could pull back into before making another leg to the upside. The same applies for a counter trend breakup structure. If you break structure the opposite direction here, see we're counter trend or pulling back long, right? So we were higher time frame leg pulling back on a counter trend this way, right? But when we finally break structure to the downside, right, taking out that swing point, we can now expect a pullback to continue short. Okay, hopefully this makes sense to you guys. So what you can do when this happens, and when price specifically stops here and stops pushing down, we can pull our fib from the high to the low and see where price could come into. Now we always want to be buying at a discounted price and selling at a premium price. So in this case we're looking to sell, so we want to be selling at a premium price. So that's above the 50%. All right. So now what we can see is we can start seeing 3 waves to the upside, and this is what the market loves to move in. They love to move in waves of 3. Okay, and if you want to do more research on the Elliott wave, Google has a lot of great examples. This is really what the Elliott wave is. Okay, it's really 3 drives and then a contractory period. All right. So what it means is we have our 0 level, so our base, our 1 level, 1 drive, 2 level, which is a pullback, 3 level, another drive, 4 level, another pullback, 5 level, all right, and another drive. So it's 1 drive, 2 drive, 3 drive before falling. Okay, that's what the market loves to move in, and it can move in that a higher time frame. It can move on the monthly, the weekly, the daily, any time frame you think of. The market always loves to move in threes. Okay, that's the psychological number for Forex, or really any asset class you can think of. And I'm going to give you another example on this on a different pair in a moment, but let me just describe what's going on in here. Okay, so I noticed this when we came into price here. Okay, we made a new high. So what I was thinking is, okay, well, we had one drive, two drive. Maybe we can get that third drive into the high before falling. So I pulled my inverse fib from the low to the high here, came into the 61.8, and we have that negative 27 that aligned with the overall fib here, because remember we broke structure counter trend, pull back 78.6. So that was a level of interest that I had, and we actually sent this out to the VIP, and we actually ended up catching a few hundred pips on this. But anyways, that's exactly what you would look for. You would look for your three drives. Actually, excuse that. What you would want is that one drive, two drive, three drive, but in fact we have that extra fourth drive. Sometimes you'll have that fourth drive, that extended fourth drive to the upside, but not all the time does that happen. Okay, so we have that extended fourth drive, and the same concepts apply. Just remember a counter trend break of structure. So we had higher high, higher low, higher high, then we had a lower low. So we want to pull back to go short. But the same concepts apply to this, right? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower low. We broke this structure in here, right? So now we want to see a pullback to go short, right? We want to see a pullback to go short here, right? Pullback to go short, but now we just refine the entry, all right? We refine the entry in here, knowing that we're not going to come above this level, and now knowing since we broke this structure point, sorry, this is all jumbled, but knowing that we're not going to break this structure point, we're not going to come above this level anymore. Okay, so let me just get rid of all this, and I'll show you what I really mean. All right, so hopefully you guys are picking this up. All right, so now since we broke structure to the downside, all right, we're not going to come above this level here, because that would be reshifting structure to the upside. We don't want to do that because we already broke counter trend structure. All right, now here, we broke structure here to the downside with this move. So now we're not going to come above this level. So any sort of pullback that we can sell it from, knowing we're not going to come above this structure now, and gives us a better risk to reward. Okay, so we could have gotten in here with the overall pullback, put our stops above this level, but now when we saw this break of structure, we could have pulled back, put our stops above this level, even had a better risk to reward. So that's what I mean about shifts in structure, and you want to pull your fib as well for each shift in structure to identify areas of interest where you could potentially be placing a trade. So in this case, wait for price to stop. All right, we had that break of structure, so from the high to the low, wherever it stops, and it came in this case, to the 78.6 again. Of course, we want to be selling at a premium, and we sold down for a few hundred pips, continuing in the overall direction of trend. Okay, so that's what I mean about shifts in structure. That's what you would be doing. Once you see a shift in structure, you pull your fib, and then not always will you have that perfect one drive, two drive, three, but you see that a lot of times in the market. Okay, in this case, we had it one drive, two drive, three, and then we fell to the downside. But again, you would just pull your fib from the high to the low when it broke structure, all right, and look for areas of interest to enter, knowing we're not going to come back above that level. All right, so stops would be above that level, and you look for an entry. All right, same thing applies to a higher time frame here on USD/JPY, right? So in this case, what we actually had a three drive cycle here, right? Higher time frame, everything, the same concepts apply, guys. One drive, pullback, two drive, pullback, three drive. Break of structure. That doesn't mean that we're going to break structure after the third drive. It just means that the end of the drive is over. We could see a pullback to then continue short. All right. So in this case, we actually ended up breaking structure on the 4-hour time frame. All right. And now what I mean by breaking structure. So we had a lower low, a lower high, lower low, lower high, lower low, lower high, lower low, higher high. We took this structure point out here. We took out this high that made this low here. We broke structure. So what does this mean? Now we're shifting. Now we're going to go bullish now. So we could expect a pullback to go long now. Okay? So we could expect a pullback to go long. So in this case, again, we just do the same thing. We pull our fib, all right, from the low that we made to the new high. Oops. The low to the high. We have to at least come to the 50%, which we did. Didn't quite come lower, which I was hoping we would. But we did end up filling a 4-hour imbalance, which, again, imbalance will be discussed on the advanced course. And that can really help you out in terms of precise entries. We did fill that to the T. I'll show you exactly where we filled it right there. The price came into it to the T. Perfect. And then we went long from there. All right. We're buying at discounted pricing below the 50%. We're buying in here. Okay. And look at this. One drive, two drive, three drive. Markets love to move in threes. Whenever you see a three drive, this is why the third drive is always the highest probability, because you identified your trend. Okay, you have that first drive, you pulled back, you failed to make a lower low. We knew that was going to happen anyways because we took out this structure here. But even if you didn't take out that structure and you were like trending long or trending short, whatever direction you're trending, and you have that higher high, you could expect that higher low for that third drive. This is the highest probability of entry. And we actually caught this entry in here, and we took this a few hundred pips to the upside. Again, caught it with VIP. So see what I mean, guys? Okay, so not only do you have a break of structure, you know how to identify that now. Whenever structure is shifted, meaning when the last high that made the new low is taken out, or when the last low, in this case if we were trending up, right? But when the last low that made the new high is taken out, just go, there we go. When it's taken out like that, that means we're shifting structure. We could expect a pullback to drop. But in this case, since we're trending down, take out the last high. We did pull back to go long. One drive, two drive, we ended up catching an entry here. Three drive, highest probability to the upside. Bang, 200 pips, I believe it was, to the upside. So that's what we mean. All right, so now going into the three market phases, and this is kind of what I already kind of went over, but diving deeper into this, accumulation, distribution, and the actual trend, okay? So this is going to be very important into identifying what the markets are doing in terms of volume, and this will be more discussed in the advanced course as well, but just a quick understanding of what this means. Accumulation, so what price loves to do is it loves to accumulate orders before moving, okay? So whenever we have the real trend, so this is the real trend, when we broke structure, we had a trend, we pushed up. Okay, we contracted. That's another part. Then we started to accumulate. Accumulate meaning accumulating positions, all right, into the market to then drive it further to the upside. Again, accumulating positions, right? Contracting at the same time, pulling back, accumulating, driving again. That's what it is. It's the trend, pullback, accumulation. Trend, pullback, accumulation, trend. Now, when we get back to the upside, it's the same thing. And if you were going short. Okay, we're starting to slow down, we're starting to distribute. This isn't the best example to go over. I guess I can go over it on AUD NZD. AUD NZD has a great example here. This is a higher time frame distribution, and disregard all this stuff. This is just my markups for the current week. But this is a higher time frame distribution. See, we were in this huge bullish phase. Okay, we had an expansionary move. All right, price is now starting to slow down. With every pullback, we could expect a distribution, meaning distributing positions and getting out of positions to then make a contractory or pullback on price. So this comes in terms of Wyckoff. Sometimes you can identify this. We don't really teach Wyckoff, but you can look up what Wyckoff is on Google if you're interested. But distribution, we're distributing positions. One drive, two drive, again, one drive, two drive, three drive, fall, right? We broke structure. Again, break of structure. Take out the low that made, or take out this low that made this high. Right here. Now we can pull our fib from the high to the low. We want to come into at least a 50%. We haven't even come into that. We will come higher. Okay? We will come into these regions of price here. And so it's just everything is seen in every single time frame, guys. You just have to be able to identify it. And if you see the shift in structure, meaning if you're going long and then you're finally breaking structure, breaking that last swing point, you could expect a pullback and then go short. All right? And we're actually distributing in price here because in a higher time frame, we have finally made a new high. We took out this high here. So now we should pull back potentially before going long again. So we're having an expansionary move, distributing. We could expect a pullback, accumulation, expansionary move to the upside. That's what we could expect probably. But on a lower time frame, it's the same deal. Okay, it's the shift in structure, distribution, shift in structure, pullback, short, right? Just on a lower time frame to then accumulate again and then go long. Because on a higher time frame, it's an expansion, distribution, pullback, accumulation, long. That's really what it is, guys. If you have any questions about this, please let us know. The market cycle is really not hard to identify and learn. Excuse me, it is quite, I wouldn't say quite hard to identify, but it can take some time to identify if you're relatively new to the market. Okay, but it's not hard to understand the concepts. It's just maybe identifying it and seeing it in real time can be sort of tricky. Okay, but you can identify these in the charts that I'm showing you, and you can really understand what I'm telling you. I hope you're understanding what I'm telling you. So we're distributing price. We're looking for that break of structure, which we got. We're pulling back and we're going short. So in simple terms, guys, this is what it is. All right, we have our expansionary move, right? Our contractory move with maybe accumulation, another expansionary move. Contractory move, another accumulation, another expansionary move. Distribution, push, break of structure, wherever that may be. You might have like a structure point in here that you break to the downside, right? Right, distribution, pull back. We're going short now because we broke structure. Go short, right? Pull back, distribution again, pull, make another leg. So 1 drive, 2 drive, 3 drive, distribution, break structure, maybe pull back, redistribution again, follow the downside, another leg. Look over here, again, same deal, 1 drive, 2 drive, 3 drive. So you're always expecting when you're driving, have that real trend. This is your real trend. You want to pull back and accumulate for another drive to the upside. Pull back and accumulate, drive to the upside. After you finish with your 3rd drive, normally you would look for an overall pullback or a reversal, meaning distribution in price. And I'll just get out of this, show you again. So what would happen, so after you have all these three drives, normally you would have maybe some sort of distribution play. Whoops. Normally you'd have some sort of distribution play, and then your drive to the downside and break of structure. Then you would pull back and go short. Again, maybe distributing again here to go short, pulling back, distributing again to go short. And then you have that 1 drive, 2 drive, 3, distribution, break structure, pull back, distribution again, push down, distribution again, push down, 1 drive, 2 drive, 3. Okay, this is how it works. And this could be just a higher time frame, push, pull back, push. Okay, again, 1 drive, maybe 2 drive, again, 3rd drive. So again, it's just the same thing on every single time frame, guys. I hope you guys are understanding this. This is really getting me excited. I love to teach this kind of stuff because this is market structure. This is the #1 thing that we focus on. Okay, so if you're not understanding this, I'm going to do one more example for you guys here. Okay, that hopefully will really open your eyes into what I'm talking about. Okay, so let's go over this one more time. All right, 1 drive. Pullback, retractionary period, accumulation. Expansionary period, contractory period, accumulation. Expansionary period. All right, so we have 1 drive, 2 drive, 3 drive. Maybe we start to distribute in price, right? 1 drive, 2 drive, maybe 1 drive, 2 drive, 3 into the high here. Break of structure. All right, so now we broke structure. Now we can pull our fib, right? Wherever it stops, we can pull our fib. Maybe we come up to the 61.8, 50%, but we have to at least come up to the 50. Remember, if we're going to be selling, we have to be selling at a premium price. All right, so we have to be selling at a premium. In this case, pull back, maybe distribute again, sell off. Pull back, distribute again, sell off. 1 drive, 2 drive, 3, 1 drive, 2 drive, 3. Again, you can be pulling your fibs along the way here. So in this case, after maybe your 2nd drive, again, the 3rd drive is the most highly likely. What you could do, pull your fib from the high to the low. Again, pull back. It doesn't have to be the 61.8. It's not always the golden region. It's just you have to be above the 50% in order to be selling. Premium pricing, we are. Okay, distribution again. So push up, so expansion, contraction, accumulation. Expansion, contraction, accumulation. Expansion, 1 drive, 2 drive, 3. Maybe 1 drive, mini drive, 2 mini drive, 3 mini drive, distribution, break of structure with this, pull back, distribution, expansionary move, contraction, distribution, expansionary move, 1 drive, 2 drive, 3, and guess what the cool part is? This could all be, this is a lower time frame trend up, this is a lower time frame trend down, but this could be, guys, just a higher time frame, expansionary move, contraction, expansionary move. See how that works? I really hope you guys are getting this. This is really just happens on every single time frame. So a lower time frame, 1 drive, 2 drive, 3, distribution, 1 drive, 2 drive, 3 could just be a simple higher time frame, expansionary move, contractory move, expansionary move, higher high, higher low, higher high. And then we'll do the same thing. We'll do the same thing over here, maybe accumulation down here, expansionary move, right? On a higher time frame, again, 1 drive, 2 drive, 3, and this could be more distribution here for another break of structure, pull back, 1 drive, 2 drive, 3 into the downside. For another higher time frame, maybe leg, pull back, leg. So it's the same thing on every single time frame. You just have to be able to identify where you are in the market cycle and identify, are you accumulating, are you distributing, or are you trending? And the best place to get in as an entry to be trading is on your third drive. Okay, and that means 1 drive, 2 drive, you identified 2 highs, you understand where your swing points are, so you can play it off of that third drive, and that's the most highly likely to be played out. That's the most likely position, the most likely trade, highest probable area in trade to get into to profit. Again, 1 drive, 2 drive, that third drive into the low is the most highly likely to work out. So I hope you learned something. If you have any questions about this, this will be discussed more in detail in the advanced course with actual better, or not, I wouldn't say better, but live examples. It's very hard to give you guys some really good live examples just because the markets have been moving absolutely erratically recently, but that is okay. We will sit on our hands and wait for the proper setups to come to us, and we'll go from there. And we still see this sort of stuff, but it's not as pretty. But if you can identify this stuff, because it happens all the time, really anywhere on any time frame, it's just your ability to identify this and train your eyes to see stuff like this and identify where you are in the market cycle. So I hope you learned something, and thank you for tuning into this video. If you have any questions, let us know, and we'll get ready for the next video. Thanks, guys.